Good morning, traders. This is Perry Wilkie. Let's try that again. Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 8 minutes till 9 a.m. Eastern Time on Quad Witch for September, right? Third quarter is winding down. Only, I think, 8 more trading days, including today, left in the quarter. So, of course, coming up, the SEC, if you caught that headline, is proposing to end quarterly statements. So much for transparency, right? Um, Either way, what we have is a look back at yesterday, right? Still just flagging up here, kind of marching up towards those longer term targets. Again, I think that that's probably it. And we'll have to see if it's it for just the fourth quarter until the very end, or if it's a multiple year top. Uh, as we look back at what we're doing, and keep in mind the cues on that dip that we had earlier this year, they printed basically 400. It was between 400 and 401. We're up to almost 600 on. That's a 50% increase off of those lows this year. I don't know if there's really any appetite. I think the target is like 604, 605 on that uh, tops, but we'll have to see if we can get through 600. I still think you should start on your long-term holdings. You should start thinning them down. I'm not saying to sell everything or even short the market. I'm just saying that start putting some cash in your pocket to reinvest later in this year. Um, take it off while the getting's good. Um, doesn't mean we're not going to hit those targets or go past them, but I don't think it's wise to hold anymore. As we look back at all of your money to be fully invested, is what I'm saying. And then as we look back, we had 665 on the SPY, right? If you notice, dividends came out this morning, so the SPY is going to be a little bit lower. I didn't look to see what the dividends were that come out of each of these, but they take let's suppose that a dollar was, I'm just making crap up, if we closed yesterday at 662, right? You pay a dollar in dividends, it's gonna knock it down to 661. They take it right off the top on the price. So as you look at where we're at, we're still up here. Remember on FOMC, I made the comment that this gap was likely to get close to a fill, but not quite, and that that would be any quick flash down there would be your buy uh, for a trade on Wednesday, right? And that you had about 90 minutes on and off to grab something down there, and that was I think the trade of the week, to be honest with you, looking back at the charts. So as we kind of look, and that's because this is just a retest of this breakout period, right? This 24 275 area, right? We dipped down to um, 242, you know, very not even a stop on it at that point. Uh, and then as we look down here, the ES, right? 6580 is what would have been nice to have traded. You did not get down to that level on it. So we'll see. So looking at the overnight action, right? The Russell uh, is at yesterday's high with some single prints in there. We'll see if those hold in the morning, and then the rest of the indexes topping out the Dow and the ES at value area high, the Nasdaq at yesterday's point of control uh, at basically 24,755. Might have been a smidgen under that. It was actually 24,750, 475. So one tick under that point of control so far. So that is an easy bogey for this morning to be looking at to see if you can get price over that. Keep in mind that 600 is going to be a psychological level. You got 600.48 is the top over there, I think, and I should put these on the charts and maybe Jack has them on his. I'd have to look, but that 604, 605 area, wherever that the targets from that deep pullback earlier I think you're right in here. So you got basically 4 to 6 points, and it's not to say that those usually get run over by a little bit if you get hit, but they usually start stalling around there. So we'll see if you get the the short. Here's the two scenarios I usually see playing out on that. You just miss the target because everyone's holding on for the last couple bucks, right? And you get to flush. Or you go a little bit over that target, you consolidate for a while, you get another baby push up, and then the rip down later. So I think you're living on borrowed time. Is just we have to see how much it is. So today is OPEX. There's quite a bit of money. You're talking about trillions of dollars of notional value coming off the table today. Um, we'll have to see. A lot of professional day traders do not trade on these quarterly expirations. That, and I'm not talking about the end of the month quarter, which is coming up. I'm talking about these quad witches, these where you have the contracts expiring, right? The September contract's going to expire tonight, today, right before the opening bell, right? Then will only be in December from now on. Like I said, a lot of professional day traders do not even trade today. Uh, the most successful ones do not, uh, or they take just a couple trades in the morning and then they're out. They don't piss around today because you're likely to have some jumpy, non-technical action today. It doesn't mean that you can't, look for limited risk and opportunities. They can be there, but usually a lot of fake outs, a lot of because the market makers just really trying to protect their ass today with trillions of dollars on the line. So what you can look for is I'm going to bring up positioning real quick here and show you what would be a normal day for today, what would be acceptable, and what would be abnormal, right? So let's get into the normal and abnormal on each of these indexes. So for today, if you look at the positioning chart for today. This is all of next week, so it has nothing to do with today. If you look over here on the right, the legends, right, each one of these lines are 5,000, right? Today, uh, down here, and it's the same. Uh, each of these are 5,000 on this as well, right? So you've got basically 6650 would be your pin for what's expiring today if you're going to pin. We closed yesterday on the cash market at 6632 basically, so that would be 18 points above on the cash market from yesterday's close. We're up about 8 points, so all things being equal, you're looking at about another 10 points is where this potential pin would be for the cash market today. Um, and then that would be kind of normal, and you can see a little bit of clustering next week, and right here between 6620 and 6630. And then again at 6670 to 6680, right? And then 6700 would be your, if you can move up through there, right? There's your potential pins for today, 6650, 6700. Looking at the SPY, right? And again, looking over here at the legend, um, each one of these lines is 10,000 for the sum of next week. Each one of these lines for today alone is at 20,000, right? So you've got at 670, you've got 69,000 calls that are going to expire today. You've got all of next week, you got 39,000 calls at 663. We're currently trading on this SPY 662 basically, so just under this. But if you look at what would be, if nothing's really going on, 661 to 666, this block here is what you would kind of just rotate through. You could get maybe a push up to 660. Uh, 8 and then 670 would be your wall, right? As a day trader, if things start going up higher, I would not look for anything above 670. That would end up being uh, right around 80 ES handles higher than we're currently trading. So then looking at next week, with that and there you could go, so 654 to 663 is kind of your range up to 665. That's all fair value. Again, we're trading right now at 662. So just under the 663. So that 663 is, don't let this fool you. This is next week. The market maker's worried about what's expiring today. It's going to play a little bit, but not as much as the positions today. So looking at the Qs in the same way, each one of these lines on for next week is 5,000, right? For today, each one of these lines is 50,000, right? So 10 times the magnitude. Um, and you can see for today, all the gamma is below where we're at. So nothing even close. We're currently trading on the Qs 596, almost 597, between 596, 597. You can see for next week, you got up to 598 and then 600, and 600 is the wall for now, but all the gamma is lower. You got the 590 for next week, but for today, you're looking at 584, 575. That would be a huge collapse to get back down there. It doesn't mean you can't happen, but I would assume for day trading, right? And you can see the cluster over here as well. So for on 584, you have 109,000 contracts. Next week, you only have 23,000 contracts for all of next week at 584. So this is, I would not think that you could get past this. That would be basically from where we're trading right now. Uh, that'd be about $12 down. So that'd be about 480 points lower. That is within the realm of possibility for today that we could touch that. I'm not saying we will, but this is where the gamma is. And then you would get another 360 points lower to get to this 575. As a day trader, I would stop probably around 586 to 5. Right around 586 on the way down and just call it a day if we end up going down. And the same thing, I wouldn't chase us over 600. That would be about $3 higher than we're currently trading right now. That would be 120 points higher. So there's your kind of a range. It's a wide range. And then you can always go down to the bottom of these sheets, right? And it sums up everything that's on here, and you can kind of get, to see where the bigger positionings are and whatnot. But again, what's happening today means more than what's happening next week, which means more than what's happening even after that. Just giving you a little 10-cent tour of positioning. So what I'm looking for, and I've marked these blocks off, right, to see if we can 595 to 598 is kind of, that's within yesterday's range basically as well, but there's a clustering there, and then again 600 is where you should be, you should get out short of that, and then come back down uh, even just above 590, 591 or so. And then I always mention this, watch the middle between 590 and 595, which would be 592 half. You can see on that yesterday, right? 593 was it on that low. You got that bounce down and then you went up to 598. That was a, $5 trade. That's 200 points on the NQ. That's a great trade. To get, 2/3 to half to 2/3 of that as well. So keep in mind, so when you look at this, right, what is normal, what is abnormal? So look at yesterday's VIX range, right? If you're within yesterday's VIX range, you should be kind of within yesterday's bell range on these. And again, like I said, a lot of professional day traders do not trade today. I'll probably only take a handful of trades early in the morning, and I will be done before the euro close. I won't trade anymore after that because um, you can get burned pretty good on that unless you're just one time framing one way or the other, and you get into a smoke show heading towards one of those large gamma areas, which is as boring as today has been. It probably will take till next week, right? Let's get this expiration behind us, then we'll see what aptitude there is. So we're either heading towards those larger targets, slowly creeping up, which would be another 100 to 120 points higher for the NQ today, or we're gonna start screwing around. But today, let me reiterate this: whatever happens today has nothing to do with anything other than the market makers trying not to lose their ass today. So I hope this helps. You guys have a great day. We'll see what Jack's looking at next.